Welcome to Nifty Indicators. It is easy to make money. It is easy to make money if we are committed, if we are consistent, if we are determined, if we are disciplined, if we have proper fund management and risk management. All this might sound something strange, but no, this is part and parcel of trading, and as you go by practicing, it will become a habit. And like everything else, winning is a habit. Making profit is a habit. We need to start cultivating this habit. To start with, we should start making small profits, start booking small profits. But only profit, no loss, only profit. As we go, once it becomes the habit to book profit, we can take a little larger steps and start booking little larger profit. Now, how we can make profit? How do we know where to enter a trade or where to exit a trade? Now, initially, let me tell you, exiting a trade is always wherever you are in profit, you can exit, no problem. You might buy at 100 and you see 125 and you might think 25 points I have got, I will get out. You might get out at 125 and it might go to 200 and you might view the exit. I took it too early exit. No, don't worry, because what you are seeing, the 200 is on the terminal. What you have booked 125, that is 25 profit on your 100, is the money in your pocket. What counts is money in your pocket, not what you are seeing on the terminal. Seeing on the terminal is the, as they say, bird in the bush. So one bird in hand is better than two in the bush. So when you book the profit, whenever you book the profit, as long as there is profit, good enough. As we go, we will learn where to book the profit, how to book the profit. But what is most important is where to take an entry. Remember, patience is a virtue in our real life too, but especially in trading life, patience is a great virtue. You need to keep waiting for your time, bide for your time. And how will you know? Now let me you into a secret. As far as I am concerned, the way I am teaching, we are not supposed to use our perspectives, our smartness, our intelligence in trading. I insist on keeping outside the trading room all our smartness, all our intelligence, and our ego. Once we sit on our chair, sit on our trading desk, follow only and only the indicators. Now, when we are talking of indicators, there are different types of indicators. Let me start with fundamentals and technicals. Fundamental indicators may or may not work at times or may take a long time to fructify, because after all, I might be buying apple at 150 rupees per kg good apples at 175 rupees per kg. But some Mr. Moneybag who has a lot of money to burn might pay for the same apple 500 or 1000 rupees per kg. If I ask him why, he might say, it is my money, why are you bothered? He is right, it's his money. So, what I'm trying to point out is, money can chase any script or index and take it anywhere it wishes. That is why the saying, as the great economist of last century, Mr. Keynes said, market can be irrational longer than you can remain solvent. So, don't try to search for rationality in the market. Nobody is promising you the market is going to behave rationally. So, what we do? We follow the indicators. Now, indicators, fundamentals might be overtaken by technicals by sheer force of money, because market is driven by money. Many times a company comes with good results, very good results, and it starts tanking, it starts correcting. And at the same time, some company comes with horrible result, but it will start taking off, it starts moving up. Why? The question is, you are welcome to ask the question why, but somebody will ask why not? It is my money, I am buying it. My problem. What's your problem? No, not my problem. Whoever has the money, he can take any share to any extent, to any height. We, if we are smart enough, we need to try to take a small bite out of it, make some small money, and be happy. So, in indicators, fundamental indicators, let us not worry about too much as short-term traders, because the long-term trading or long-term investment, fundamentals really will matter. But as we are talking of trading, especially short-term trading, let us worry more about technicals. Now, in the technical indicators, there are again two types: leading indicators and lagging indicators. Leading indicators are early indicators. They give indication very early, but they are predictive in nature and their success rate is very low. Leading indicator can be of any sort. It can be like my grandmother used to say, crow is crowing outside, guests will come for lunch, and 90% of the time it might not fructify and nobody is bothered, and 10% of the time when it really works, she will say, see, I told you. Yes, that is what is leading indicator is all about. When it works for you, you wake up and you scream, see, I told you so. Whereas lagging indicators work fully on historical data. It is built on the premise that Nifty was at X, from X to Y it has gone, Y to Z it has gone. So it looks like it is moving from X to Y to Z plus 1 to Z plus 2, etc., etc. And these lagging indicators have, they are very quite late in the day. They come because they have to be based on the premises of the past history. So they come late. But when they give us some indication, when they give us some signal, their success rate is very high, 70%, 75% plus. That is why we go by lagging indicators. There are many types of lagging indicators. We'll take them up For today, just see how we need to look at indicators. What is the benefit of looking at indicators? What is the benefit of following indicators? What is the benefit of reading the signals and following those indicators? You see, this is a Nifty day chart for past 6 months as of 19th of June 2022. On 17th of June 2022, Nifty made a 52-week low of 15,183.40. That is when I saw the opportunity that market is going to go up, and anyone who followed, anyone who listened, anyone who went long anywhere closer to that went into huge money, because it went all the way up to 18,000 plus, made around 3,000 points in the next less than 2 months or so. So it is up to us which indicator we follow. That is why I keep saying, learn to study, analyze, backtest, trust, and follow the indicators. If we do that, we are into big money. We will take up one by one the indicators. We will study them as much as we need to. We learn how to follow the indicators, how to read the indicators, how to read their signals, and when to take entry into any trade as per the indicators. We will do that next time. Till then, take care. Goodbye.